is still necessary to continuously track and pay attention to market trends. In any industry in the world, to succeed, one must invest time and energy for the long term, as well as persistent efforts. Now, this point should be understandable to everyone. In addition, besides introducing the progress of our asset management, scale comparison, and how we achieve rapid asset growth during this period, we will also provide a more specific introduction about our trading and profit aspects. Today, we will also introduce an investment master to everyone, Bernard Baruch. Now, this master has been rated as one of the top 5 security traders in the world, and I believe he will bring us more experiences and insights. All right, so without further delay, let's continue sharing the contents we just talked about. All right, so tonight we're going to start off with analyzing and share some major macroeconomic news. As we all know, for India, the most important national event is the election, which has already been settled. However, the continuity of the policies with the new cabinet taking office, as well as new target planning, are still worth our ongoing attention. Now, of course, news on the economic front and other aspects should not be ignored as well. Now, next, let's take a look at the major financial and economic news to be shared tonight and how we should analyze this type of information. Okay, so first piece of news that we're going to be going over, India may grow 6.7% on average from fiscal year 2025 to fiscal year 2027, according to the World Bank. So let's first take a look at the data on the Indian economy. The World Bank predicts that the average growth rate of the Indian economy for the fiscal years 2025 to 2027 could reach 6.7%. First, the World Bank maintained its forecast at 6.6% GDP growth for India in the fiscal year 2025 on June 11th. As early as April this year, the World Bank had already raised its GDP growth forecast for the current fiscal year in India by 20 basis points to about 6.6%. Now, the global institution stated that although India's expansion pace is expected to slow down, it will be the fastest growing economy among the world's largest economies, according to its June 2024 Global Economic Prospects. After achieving high growth rates in 2023 to 2024, it is expected that for the 3 fiscal years from 2024-2025 onwards, India's annual growth rate will reach 6.7%. Now, the World Bank predicts GDP growth rates of 6.7% for India in the year 2026 and then 6.8% for the fiscal year 2027. India GDP growth has surpassed everyone's expectations with a growth of 7.8% in the quarter from January to March, but lower than the 8.4% seen in the previous quarter. Data released by Indian Ministry and the Statistics and Program Implementation on May 31st shows that the GDP growth rate for the full year 2023 to 2024 has been revised upward from the second estimate of 7.6% to 8.2%. Now, apart from the GDP growth, the World Bank also believes that global inflation is slowing down, but at a slower pace than previously forecasted, with an average inflation rate of 3.5% this year. Now, given the persistent inflation pressure, central banks in developed economies and emerging markets and developing economies may remain cautious about easing monetary policy. Therefore, it is expected that the average benchmark policy rates over the next few years will remain at around twice the average level from 2000 to 2019. Persistent inflation could lead to delays in implementing loose monetary policies. Sustaining high interest rates over the long term will dampen global economic activity. However, from a positive perspective, the pace of global inflation slowing down may be faster than the baseline forecast, thereby accelerating the pace of easing monetary policies. Whether from the perspective of GDP growth or global inflation control, things are moving in a better direction. The robust development of the Indian economy is the cornerstone of the long-term bull market in the Indian stock market. That's why we have always emphasized that although the profit risks in Indian stock market have increased recently, in the long run, there should be no problem with India's stock market continuing to rise. It is for this reason that our company headquarters has decided to strengthen market share in the Asia Pacific region, especially in the Indian region. Now, this is also the driving force behind why we must strive to win this competition for the location of the Asia Pacific headquarters in the Indian region. All right, so second piece of news. India's Prime Minister Modi's government to stick to deficit target despite poll setback, says a close source. So let's look at the issue of continuity of the government policies after the new cabinet took the office. A government official stated that despite speculation that there might be a need to increase spending to appease coalition partners, Indian Prime Minister Narendra Modi government has no plans to raise the fiscal deficit target. Modi's BJP party failed to secure an absolute majority in the elections that ended on June 1st, but secured a third term with the support of 14 regional parties. Rating agencies and analysts suggest that the government may increase welfare spending and support the states represented by the allies of the National Democratic Alliance. Now, according to local media reports, two key allies of the BJP, the Tamil Nadu-based Dravida Muntra Kazhagam and the Janata Dal United from Bihar in the north, have requested special financial assistance. Now, in February of this year, the government set a fiscal deficit target of 5.1% of GDP in the midterm budget announcement, lower than the revised 5.8% from the previous year. The final budget will be announced in July. Now, at least there won't be fiscal easing policies until 2024-2025, the official said, declining to disclose the names since budget discussions are confidential. Now, the official added that if states in India request immediate financial assistance, there is enough space in the budget to meet those demands. The interim budget provides 1 trillion rupees, which is about 12 billion USD dollars, in loans to states from capital expenditure and additional 750 billion rupee loans for states implementing certain reforms. Sources indicate that the figures in the final budget will be broadly similar to the midterm budget. On Monday, the government reappointed Nirmala Sitharaman as finance minister, indicating policy continuity. It is evident that despite not securing an absolute victory in the elections, the policies of the previous government during Prime Minister Modi's third term will continue. Expected to maintain its current policy focus to drive India's economic development, infrastructure construction, social progress, and elevation of international status. The continuity of these policies contributes to achieving India's long-term development goals, raising the living standards of citizens, and enhancing the country's competitiveness. This ensures the healthy and sustainable development of stock market, propelling this bull market further, and is a crucial period for people in the transcend economic strata. So a couple of takeaways here. With the new governments, they're still focused on reforms. They have been doing well in progressing in India's growth, so they're going to keep and maintaining that path that they're on, and they're not going to stray from it. So there's lots of good news. Okay, last piece of news. Shrinking Fed rate cut expectations to keep U.S. Treasury yields elevated. So let's focus on the information about the Fed rate cut again. Now, according to a survey of bond strategists by Reuters, as expectations of a Fed rate cut diminish, U.S. Treasury yields are expected to remain stable over the next 3 months, with only a slight decrease by the end of the year after reaching a peak of 5.02% in October. The benchmark U.S. 10-year Treasury yield plunged by over 120 basis points as traders anticipated a 150 BPS cut by the Fed this year. The U.S. economic data is generally strong, and inflation rate is still higher than the Fed's target, which has led financial markets to limit these expectations to only 2 rate cuts this year. Now, starting from September, another survey of economists by Reuters suggests a significant risk of only 1 rate cut in 2024 or no rate cut at all. The repricing of interest rates futures has caused yields to rebound to 4.44%. Although the trend has been unstable, spanning nearly 40 BPS in the past 2 weeks. Now, according to the median forecast of 5 fixed income strategists, an analyst surveyed by Reuters from June 6 to 11th, the U.S. 10-year Treasury yield is expected to stabilize around 4.35% by the end of August, then decline to 4.23% and 4.13% within 6 and 12 months, respectively. Now, in terms of yields, we believe they will fluctuate the trend lower by the end of the year. We still believe that inflation pressures will ease and the Fed will eventually cut rates once or twice before the end of the year. In fact, market speculations fluctuate regarding whether and when the Fed will cut rates, and even U.S. economic data shows some conflicting signs. However, there's no need to dwell on it too long, as the Fed will announce its rate decision later today. So let's just wait and see. Now, we originally thought it was going to be 3 rate cuts this year. So it starts from July, and then the July kind of canceled out. So now we expect it to be in September and November. Now they're saying possibly 1. So if it doesn't happen in September, we're probably looking into November. Okay, market recap time. All right, so we're going to start doing the analysis of our major indices. So today, the Nifty 50, of course, there's going to be tons of volatility. The government's still settling in. So there's going to be a lot of ups and downs, fluctuations over everything. Let's not get too much into details here, and let's jump right into our Nifty 50 index. Okay, so onto our Nifty 50 index. As you can see from the day, we are in a slow upward trend with humongous drops and humongous rebounds to the end of the day. All right, so the overall Indian market is still rising and falling. Now, this has been the case for the past 3 trading days. So the market performance is basically in line with our expectations. It is often futile to try to profit in such a market unless you bought stocks at a really low level and you're closing at a relatively high level. Now, as I mentioned before, in the short term, the 23,400 to 23,500 range above the Nifty 50 index will be our resistance area. So from the technical perspective, these days, the market has shown a tempting move to the upside. Now, what does this mean? It lures investors to buy, and then the main players or the institutional investors take the opportunity to sell the stocks they want to sell. Now, in fact, from the change in trading volume, you can see that you can pay attention to the change in volume in the Nifty 50 index in the last half hour today. If you open the volume chart, you can clearly see that the trading volume significantly increases in the last 30 minutes, which indicates a large number of short positions being sold. This was also the case in the previous trading day as well. Now we think about it. Facing such a market trend, is it likely to profit through ordinary trading? Obviously, this is not easy, even for experienced investors. It is very difficult to profit. So in the current market, there are still certain risks in ordinary trading. So my point of view is quite clear, and it's been clear since before the election. It is the same as the experiences of the masters we have studied. When the market trend is uncertain, it is best we just avoid it. We can engage in trades with guaranteed profits. So why would we jump into this? We've been doing great with IPO subscriptions. We've been doing great with block deals. So these are the kind of things that we should be doing when the market volatility is so high. All right, jumping into our Sensex index. Now, today the index also rose to a high and then it fell back. But the difference between is the Nifty 50 index did not hit a new all-time high today. Now, currently the index is oscillating at the upper trend line of the rising channel. Now, usually in this situation, if there is no strong upward movement in the short term to move away from this trend line, then ultimately there will be a downward adjustment. Now, the index also accelerated its decline in the last half hour of trading. Now, in fact, this is a cautious strategy adopted by some institutions or investors in the market before the Fed announces its policy decision. Now, of course, regardless of the reason, we only look at the final result, which is that whenever the market sees a certain degree of increase during the day, there will be a strategic sell-off at the high points. Now, this situation is unlikely to change in the short term. I shared with everyone a few days ago that whether it is the Nifty 50 index or the Sensex index, after experiencing a short period of rapid rise and fall, both bulls and bears have consumed a lot of the momentum, especially for the bulls. So it is difficult to organize a significant upward movement in the near term. Perhaps after the Fed's interest rate decision this time, the market may become slightly clearer. However, in the end, we need to analyze and judge according to the actual trend of the Indian market. There are still uncertainties in the current market, and risk management is still the primary factor in current trading. Everyone should not be too impatient. Just patiently follow the trading instructions in our wealth growth plan, and profits is naturally going to come. All right, so this is the comprehensive analysis of the Nifty 50 index as well as the Sensex index. I hope it was helpful to everyone. So we're going to be moving into the next part of our day. All right, so the Asia Pacific headquarters location selection. Now, currently we are in the second phase of competing for the location of the Asia Pacific headquarters. Now this is the stage of comparing asset management scales. Now, it has become increasingly important for us to secure the first place in the asset management scale so that India can secure the location for our regional headquarters. Although we are currently still ranked third in the competition, this is mainly related to our current strategic situation in the Indian market, as we are in the phase of accumulating capital. However, I have some good news to share with you all. Even though we are still ranked third, our asset management scale is now close to the second place. And I personally anticipate that by the end of the week or even next week, we may rise to the second position. So therefore, personally, as well as our Indian team, we are still have full confidence in this. So starting this week, our profit-making projects have already begun, and our Indian team's asset management scale is about to enter a period of rapid growth. Now, what reason do we have to worry then? Now, of course, I'm very grateful to more and more people joining and supporting us. Now, whether it's from increasing funds or from the magnitude of profits, we have made significant progress since the beginning of this journey. Everyone's execution in trading is also getting better, which means we are earning a little bit more profit. So consequently, our asset management scale is also going to be increasing. So once again, thank you everyone. Regardless, it is most important to focus on doing what needs to be done at the moment. So everyone should cherish every profit opportunity and strive to quickly grow their capital. Our 5x profit plan will soon be implemented, and we hope to have more members and friends join our 5x profit plan. Okay, so rights issue Sprite Agro Limited. Now today we conducted a rights issue transaction of Sprite Agro Limited, which is also a transaction with guaranteed profit. Now I'm not going to repeat what a rights issue is for today, but for those who are not too certain, please go check the messages in the group. So today I want to talk a little bit about the stock Sprite Agro Limited and our transaction. Now, due to the particularity of rights issue transactions, listed companies always issues rights issues at a discounted price when they issue these. And our transaction is the same. So I hope everyone is very clear about this. They always tend to ask, is this profitable to buy? And after buying it today, everyone's profit can possibly gain as high as 45%, which is a certainty of a profit opportunity. As you can see, due to substantial improvement in the company's operating conditions and operating performance, the stock has also been sought after in the market. The price has been rising continuously in the recent times. Basically, it's rising about 5% every day. So let's talk about the company's operating performance. The company's annual revenue last year increased by 842% to about 72.59 crore. However, the industry's overall average revenue growth rate in the last fiscal year was negative. So the company's operating ability and profitability are rare in the industry. Regardless of the industry situation, we are not a long-term investment. We only want the premium during the allotment period. So due to the agreement, we need to hold the stock for 5 days, but this is not a bad thing at all. You can see it at a glance. At present, the stock has continued to rise by the daily limit, and we have reason to believe this trend will continue. If the stock continues to rise by 5% every day in the next 5 days, how much profit is that will we make after? So have you calculated it? I haven't really calculated it either, but we all should know that this is a very large profit margin. And there's compounding profits too, right? And it will bring very lucrative profits to everyone. Now, this is excellent news for everyone. So opportunity in a volatile market, we're still finding ways to make more money, right? So everyone can make more money in our asset management scale is going to definitely increase sharply and put us into that second place. So win-win situation for everybody. Now, with such profits, I believe that more members and friends can join our 5x profit plan. So I'm not going to talk too much more about it. Regarding the stock, you can just hold it with a peace of mind, and the profit is going to be for certain. So next, let's go over the other contents of this evening. Okay. In the previous sharing session, we introduced everyone to the 7 investment secrets of the world-renowned investment guru Jim Rogers. I believe friends have learned a lot of experience and ideas. So today, let's learn from the experience and insights of another master who is known as one of the top 5 greatest securities traders in the world, Bernard Baruch. Now, why should we specifically study this master? Because he has not only achieved remarkable performance in the stock market, but also is a politician who has successfully operated in both the political and the financial fields, which is a remarkable achievement. So Baruch was born in 1970 and he passed away in 1965. He was a prominent figure in both American financial and political arenas, having conquered Wall Street in his legendary life and then later Washington as well. Baruch is known as a speculation master. He was a lone wolf, a presidential advisor, and a park bench politician. However, people refer to him as the man who sold before the big stock market crash. Now, Baruch is both a self-made success story and a strategic stock trader. He is both a flexible investor and a politician who understands economic development. All right, so let's introduce a little bit of his life, right? So Bernard Mans Baruch, born in 1870 to about 1965, he was an American financier. During World War I, he served as the director of the War Industries Board. In 1916, he was appointed as an advisor to the National Security Council by President Wilson. He attended the Paris Peace Conference in 1919. In the 1930s, he opposed the Nazi Germany. So during World War II, he served as a personal advisor for President Roosevelt, assisting in wartime economic mobilization efforts. In 1939, he proposed the Industrial Mobilization Plan for comprehensive economic mobilization and wartime economy control. But it was not adopted due to the unripe timing. He had been a special envoy for the president to countries like Britain in carrying out diplomatic missions. After the war, at the behest of President Truman, he served as a representative to the United Nations Atomic Energy Commission. In 1946, he proposed the Baruch Plan for international control of atomic energy. He played a significant role in the international affairs. Baruch passed away at the age of 95. Well, lived till 95 in 1965, and he was the author of American Industry in War, amongst other works. Now, people who are in the field of financial investment studies and work with probably familiar with Baruch College. It was a campus of the City University of New York. Known for its finance and investment courses, it was founded by the legendary figure in Wall Street, the Jewish Bernard Baruch. He himself preferred to identify as an investor. Now, people bestowed him with titles like speculative master, lone wolf, presidential advisor, and park bench politician. However, many prefer to call him the man who sold before the stock market crash. Now, initially, he did odd jobs in a small brokerage firm in New York. He was earning about $3 a week. Through sheer determination, he quickly rose to become a partner in the company. He invested all he had to purchase a seat on the New York Stock Exchange and became a millionaire by the age of 30. Despite facing bankruptcy several times, by 1910, he had become one of the few tycoons alongside Morgan on Wall Street. Now, he started from scratch to become a wealthy man. A legendary stock trader, high-profile investor, he was a capitalist versed in business risks and figure widely respected for his conquest of Wall Street. In the first half of the 20th century, this descendant of Germans stood out in the American stock market and political arena. When you mention the tobacco king Duke, you cannot ignore him. And when you talk about Guggenheim and Morgan, he inevitably comes to mind. He had a passion for both the stock market and politics, so being dubbed as a presidential advisor and park bench politician. But people still refer to him as the man who sold before the stock market. His personality was unpredictable, his actions varied, and his personal views were as volatile as the stock market. Always subject to change, hence his reputation always carried a legendary aura. Okay, so investment master. Now, Wall Street investment master Bernard Baruch was born in 1870 in Camden, South Carolina, USA. In 1889, he entered Wall Street as an apprentice in a stock brokerage firm, starting to learn about risk investment with a weekly salary of $3, but soon became an outstanding investor. Now, self-made Baruch in Hebrew means is a blessing. So by the age of 32, he had accumulated a fortune of $3.2 million. It's worth noting that back then, $1 was equivalent to at least $30 now, and in just a few years, he was worth over $100 million. Now, despite experiencing the economic depression between 1929 and 1933, he was still able to amass tens of millions of dollars. It is estimated that Baruch's peak wealth in 1929 might have been between $22 million and $25 million. In 1931, his asset list showed that his total assets were $16 million, including $8.7 million in cash, $3.69 million in stocks, $3 million in bonds, and about $0.55 million in loans. The properties Baruch left behind were valued at over $14 million, and he donated nearly $20 million to various causes throughout his life. Baruch was one of the few great speculators of that era who both earned and retained the fruits of victory. So such extraordinary trading results are inseparable from his wise trading strategies and his executions. The father of mutual funds, Roy Newberger, said, Baruch is the investor who can best seize the moment. His philosophy is to do well, but not to be greedy. He never waits for the highest point or the lowest point. He buys in a bull market and sells in a bear market. He advocates buying early and selling early. So that was the kind of trader he is. I really like this quote from him. It says, don't try to be a jack of all investments. Stick to the field you always know best. Okay, next one, miracle of wealth. So in 1897, young Baruch created the first miracle in his life. That spring, on Wall Street, the stock of the American Sugar Refining Company began to plummet, and the people is in a pessimistic mood started selling frantically. Now, this was mainly because at the time the Senate was discussing a proposal to lower the import tax of foreign sugar, while the House of Representatives was also going through similar legislative procedures. The actions of the Senate were constantly affecting the ups and downs of the stock market. However, Bernard firmly believed that the Senate would not pass this proposal, so he thought that the Western sugar beet planters, like Wall Street, also wanted to obtain greater profits through tariff protection. So he used $300 as a deposit to purchase $3,000 worth of stocks. Later, as Bernard expected, the Senate rejected the proposal, and the stock of the American Sugar Refining Company soared continuously. In May of the same year, the stock price was about $115, and then by the end of July, had risen to $139. As the stock price rose, Bernard used the cash he earned from his previous deposit trading to buy more of the stock, so continuously reinvesting his winnings and betting it all. On August 31st, a news about the Treasury Department banning the import of Dutch sugar drove the stock market to achieve the highest single-day increase on record, with the stock soaring by $8 to reach $156.25. When all the good news was priced in, it meant bad news as well. Now, at this point, Bernard decisively sold his stocks, eventually making a profit of $60,000. So think about it. Starting with a $300 investment in 1897, within about 3 years until 1900, Bernard's personal assets rapidly increased to $1 million, which can be called a miracle, and he was hailed as Wall Street genius. Now, what is even more admired by the public is that Bernard achieved these substantial gains using unconventional investment methods. Okay, millionaire. So in 1898, Baruch's investment talent once again shocked Wall Street. On July 3rd, 1898, while spending the weekend with his wife and his family in Long Branch, New Jersey, Baruch learned from his friend Huseman that the Spanish fleet in Santiago had been destroyed by the U.S. Navy, and the American forces has decisively won the Spanish-American War. Baruch immediately realized that victory meant the war was coming to an end, and the American financial markets would bounce back rapidly, so possibly even gaining strong momentum. The next day, July 4th, was Independence Day, and the New York Stock Exchange would be closed as usual. Now, due to that, but the London Stock Exchange would still operate normally. So Baruch saw an opportunity to purchase stocks at a low price in London and then sell them at a higher price in New York, making a significant profit on the difference. However, the challenge was how Baruch could arrive at his office in New York before the London Stock Exchange opened the next day due to the time difference. When the London Stock Exchange opened, it was only 5 o'clock in the morning in New York, as there are no trains to New York the day before Independence Day. So Baruch had a stroke of a genius idea and rented a special train to rush overnight to New York. He made it back to his office at daybreak and sent a large number of buy orders for stocks at London through telegraph. The next day, as optimism prevailed that peace would bring good fortune, stocks on the exchange started to rise, and Baruch ensured both his boss and himself made a very handsome profit. So, in just 3 short years, from 1897 to 1900, Baruch's personal assets soared to $1 million US from being penniless young man when he started. Now, earning millions of dollars in assets in such a short time was truly a miracle. Now, to amass this wealth, Baruch demonstrated his versatile and unconventional investment strategies. Nowadays, most investors on Wall Street are experts in a particular field, either brokers, venture capitalists, traders, or investment bankers. But Baruch managed to embody all these roles and became a jack of all trades in investing in a very short period of time. So sometimes you have to think, if there is a very good opportunity, it doesn't matter if it's a holiday or if everything is closed. You know, that we are lucky enough that we are in different time zones. So, you know, these are some of the advantages that these brilliant minds have. They always somehow find a way to figure it out. All right, so investment philosophy, choosing clients. Now, I've told everyone before that in this world, no matter which industry we pick, no one can succeed easily. Success will definitely have its own ideas and persistence. So about Bernard Baruch's great success, what is his investment philosophy? Baruch's first investment philosophy is choosing companies wisely, choosing clients. Now, what does choosing clients actually mean? In fact, it's a concept that I've shared with you before, to buy into good companies. Doesn't that sound familiar? So Baruch proposed to pay attention to 3 aspects of investment targets. First, it must have real assets. Second, it's best to have operational franchise advantages, which can reduce competition and ensure the future of its products or services. So think about it. Isn't it consistent with Warren Buffett's concept of a moat for companies? And then third, and most importantly, it is the management ability of the investment target. So Baruch warned that it is better to invest in a company with little funds but great management than to touch the stocks of a well-funded but poorly managed company. Baruch also pays considerable attention to risk control. He believes that one must always keep a certain amount of cash on hand. He advises investors to reevaluate their investment periodically to see if the stock price can still meet the original expectations after changes in the situation. He also reminds investors to learn to cut losses. Making mistakes is inevitable, and the only choice after a mistake is to cut losses as soon as possible. Baruch warns not to try to buy at the bottom and sell at the top. He says anyone who claims to always buy at the bottom and sell at the top is definitely lying. So therefore, some people criticize Baruch, believing that one of the reasons he was called the master of speculation is his seemingly all or nothing style. Second one, always go against the current. Now, the masses are always wrong is the first principle of Baruch's investment philosophy. Many of his profound insights about investments are derived from this basic principle. So, for example, Baruch advocates a very simple standard to differentiate between when it is time to buy at a low price and when to sell at a high price. When everyone is cheering for the stock market, you should decisively sell, regardless of whether it continues to rise. When stocks are so cheap that no one wants them, you should dare to buy. Regardless of whether they will fall further, people are often amazed by Baruch's judgment, being able to seize fleeting opportunities. Now, he believed that any so-called real situation in the stock market is conveyed indirectly through people's emotional fluctuations. In any short period, stock prices rise or fall mainly not because of objective, non-humane economic forces or changes in the situation, but because of people's reaction to what is happening. So when he reminds everyone that the basis of judgment is understanding, if you understand all the facts, your judgment is correct. Otherwise, your judgment is going to be wrong. So in terms of understanding the psychology of the masses, Buffett and Baruch are on the same page. Buffett also often says that when the public is greedy, you should be cautious. And when the public is fearful, you should be aggressive. These two masters have many similarities in their investment philosophies. Baruch's investment method is more flexible and changeable. He advocates strict stop loss. He said that if investors have the consciousness of a stop loss and only make the right decisions 3 or 4 times out of 10, they will still become wealthy. He advises investors to be prepared on both fronts so they can exit at any time. Buffett seems to be more conservative, not easily changing his established investment plan. He said, if you cannot calmly execute the plan after the stock price has halved, then you are not suitable for a stock investment. Being able to do this lies in Buffett's cautious stock selection method. So in this light, Buffett and Baruch's investment methods both have similarities and many differences. So therefore, by learning from the essences of these great investors, picking what suits oneself and rigorously following through, one can pave their own path to success. All right, next one. Don't believe in the hype. So one of the views regarded as truth by Baruch is that no one can fully grasp all the investment essentials in every industry. So therefore, the best investment approach is to find the industry that one knows and understands the most, and then invest all your energy into it. For Baruch, he admitted that he had never been able to grasp the investment tricks of agriculture products. He once said frustratingly, as far as I can see, as soon as I invest in a certain agricultural product, that product becomes less and less valuable. Baruch's most painful blow in the investment in agriculture product was a coffees trade. He believed in authorities' prediction that coffee would greatly reduce in production and bought a large amount of coffee. However, the market conditions turned out to be contrary to this authority's prediction. That year, coffee's production exceeded that of the previous year. Despite government measures to support the coffee prices, prices continued to fall in the market. So finally, Baruch painfully disposed of all his coffee positions that he held, losing a total of 7 to 800,000 US dollars. He had admitted that the reason for his failure this time was entirely due to blindly believing the authorities' words without analyzing the changing market. This experience left an unforgettable mark on Baruch for a lifetime. Even later, he still said with lingering fear, some things about insider information seem to numb people's reasoning abilities, making them ignore the most obvious facts. So of course, what everyone needs to distinguish is pay attention to that so-called news, and regular news as well as the financial data are not the same thing. Financial data must be based on a data published by the National Supervisory Unit. So we've always said don't just blindly follow somebody. If somebody has a really good recommendation or really believes in a stock, still you have to do your own due diligence and research. All right, last but not least, investment literacy. All right, so Baruch also tells us that as an independent investor, we must have a certain level of professional investment literacy. So for example, number one, we got self-reliance / independence. You must think independently, avoid being emotional, and eliminate all environmental factors that may lead to irrational behavior. Number two, judgment. Do not overlook any detail. Ponder for a moment. Never let your hopes influence your judgment. Number three, courage. Do not overestimate the courage you may have when everything is against you. So believe in yourself, right? Number four, agility. Good at identifying all factors that could change the situation and factors that could influence public opinion. Number five, caution. Be flexible. Otherwise, it is difficult to be cautious. When the stock market is in your favor, you must be even more humble. It is not prudent to start buying when the price has reached its lowest point. It's best to wait and see. It's not too late to buy later. Insisting on selling only when the price reaches the highest point is also not cautious behavior. It's probably safer to let it go a bit faster. Number six, flexibility. Consider all objective factors and your own subjective opinions together, over and over. You must completely abandon the attitude of stubbornly holding your own opinions or being self-righteous. The idea of making a certain amount of money in a certain period of time will completely destroy your flexibility. Once you decide, act immediately. Do not wait and see the stock market or how it will behave. Almost everyone finds it difficult to escape being controlled by their emotions. They are either too optimistic or too pessimistic. Once you have grasped the objective facts and formed your own opinion, observe the trend quietly. You should know what the market is supposed to do, but do not mistake for what the market will do. The more the public intervenes in the stock market, the greater its power. Do not try to go against the crowd, nor stand too far forward. If it's a bull market, of course, do not go short. If there is a possibility of a reversal or holding stocks that worry you, do not stay for too long. When panic hits the stock market, even the best stocks should not be expected to be sold at a reasonable price. When stock prices climb, consider comprehensively what could make the climb even higher, and likewise consider the opposite. So do not forget history. The same applies when stock prices fall. Stop the losses, let the profits continue. Overall, action should be taken quickly. If you can't do this, please reduce your involvement. Also, once you have doubts, please reduce your involvement. Once you have made a decision, you should always act immediately, ignoring the market's reaction at that point. However, when planning, you must consider the market trend from time to time. So that's kind of a quick summary of his investment tips. Okay, cautious politics. So just as Baruch was calling the shots in the stock market, the First World War catapulted him into American political arena. Baruch handled both opportunities flawlessly. He heavily invested in the soaring stock market, steadily holding onto the stocks that brought him unlimited wealth. Now, at the same time, he found a place for himself in the 20th century American political scene and personally pioneered the national wartime management systems. As an investor, Baruch's investment experience mainly relied on accurate judgments, following market trends, strong willpower, and persuasive skills. Baruch belonged to the kind of people with extraordinary vision and strategies, but after entering politics later on, he was cautious in every aspect. Regarding the position he held, he stuck to principles, actively participated in activities, and unconditionally obeyed when there were differing opinions. He even likened himself to a timid, shrinking turtle in his memoirs. Now, Baruch had worked with several American presidents, including Wilson, Coolidge, Roosevelt, and Truman. President Truman's appraisal of Baruch was, "This man thinks he should manage the entire Earth and even the moon and Saturn." As for Baruch's political achievement, we're not going to go into detail here. For those interested, you can explore the relevant materials on your own. So that is going to wrap up our evening's class. Very interesting master. You know, if you have some time, look at his political career. You're going to learn a little bit, few tips and tricks here and there. You can also can compare him to Warren Buffett. I find these two very similar in trading as well. Take these strategies that you learn and apply it to real life, you know, and like into your own trading strategies and see what you can come up with. So that is all we have for tonight. Thank you, everyone, for your unconditional support, and I'll see you all next time.